Everyone talks about stocks, but if you're new to investing, it can feel overwhelming. What are stocks? What do all these terms mean? And how do you avoid beginner mistakes that could cost you money? In this video, I'm going to break it all down. Let's start with the basics. What exactly is a stock? A stock is a share in a company. When you buy one, you're buying a small piece of that business. That means if the company performs well and earns more profit, the value of your stock usually increases. If the company struggles, the stock price can fall. You're not just buying a ticker symbol, you're buying ownership in a real business. Next, let's talk about dividends. These are regular payments some companies give to shareholders from their profits. Think of it like a reward for holding onto the stock. It's especially common among larger, stable companies. Dividends can be a great way to earn passive income while you hold long-term investments. Now there's market cap, short for market capitalization. It tells you how big a company is. Companies are usually categorized as large cap, mid cap, or small cap. Large cap companies are typically more stable, while small cap companies might be newer or growing quickly, but they also come with more risk. It's important to understand the size of a company before you invest. Then there are ETFs, exchange-traded funds. These are bundles of multiple stocks grouped together that you can buy like a single stock. They're one of the easiest ways for beginners to get started. Instead of choosing one company, you're investing in dozens or even hundreds at once. This reduces your risk and adds instant diversification. Now, let's cover some of the biggest mistakes beginners make. Mistake number 1, chasing hype. Maybe you see a stock all over social media. Everyone's buying it, and it feels like a gold rush. But by the time it's trending, the price is usually already inflated. You could end up buying high and watching it crash. Always do your own research. Don't invest based on emotion or popularity. Mistake number 2, putting all your money into one company. Even if the company seems solid, anything can happen. A lawsuit, bad earnings, or even a bad headline can crash the price. That's why diversification matters. Spread your money across different companies and sectors. It protects your portfolio from one stock dragging down your entire investment. Mistake number 3, trying to time the market. Many beginners try to buy low and sell high, constantly moving in and out. But even professionals struggle to do this consistently. A better strategy is to invest steadily over time. This is called dollar cost averaging, where you invest a fixed amount regularly no matter what the market is doing. Over time, this helps smooth out the highs and lows. Also, don't forget about fees. Some apps or brokers charge commissions, and some ETFs have small management fees. Always check what you're paying. Fees might seem small, but over time, they can eat into your returns. Now let's make it simple with an example. Imagine your friend starts a bakery and says, "Give me $1,000 and you'll own 10% of the business." If the bakery does well, your 10% becomes more valuable. If it starts making $10,000 in profit a month, you might earn a cut, or your share might just be worth more. That's what owning a stock is like. You're becoming a silent partner in a business. Some stocks go up fast, others grow slowly. Some pay you regularly with dividends, others reinvest profits to grow faster. There's no perfect stock, just ones that fit your strategy and goals. Here's something most people never hear when they start. You don't need to be rich to invest. You can start with $10, $50, or $100. What matters more than how much you start with is how consistently you invest. Even a small amount invested regularly can grow into something meaningful. In the beginning, keep it simple. Choose ETFs if you don't want to pick individual companies. Stick with companies you understand, and always invest with money you don't need immediately, because the market can go up and down in the short term. Stocks are powerful tools for building wealth, but like any tool, you need to know how to use them. Start small, keep learning, stay calm, and think long term. If this video helped make stocks feel a little less confusing, hit that like button and subscribe.